Okay, my name's Willy, Kibet. I'm based here in Industry Area, Family Bank, Credit. So, okay, we have various credit products that we offer to the entrepreneurs, to anyone in business. Okay, we call them, we have a lot of them, so we cannot go into details. We will just mention them. Okay, we have two categories. We have funded and non-funded facilities. All of them are lending facilities. So maybe we start with the funded. Okay, let's talk about non-funded. Non-funded are the trade finance products that we don't fund. It's a lending in such a way that we undertake to support you. Examples are, for example, a bid bond. I know most of the people don't, find it very difficult to understand, but it's something that is very simple. It's a guarantee by the bank. So sometimes you venture, you want to supply the government. The government now tells you that provide us with a guarantee from the bank, because now you as a customer as well as the government, you are in contract. But since you don't trust each other with the government, because you might not perform, the government might not pay, that's where we come in as middlemen. In that case, we become the intermediary between the bank and between you, the customer, and the government. So in such a case, we give you a guarantee. This one, you've not received any money. In that case, we call it a non-funded facility. So under the guarantees, we have the bid bonds. When you are tendering, they've invited you for a tender. In that case, you must provide a bid bond. There is the performance bond. That is once you get the contract, now you want to be given the contract. The government or an entity that has given you that contract, well, let's call it the procuring entity, wants to be sure that you're going to perform as per the contract or as per the specifications, or you're going to supply the correct quality and description of the goods. So in that case, we give you a performance bond. So those are the non-funded that we normally offer to SMEs. Okay, we have the funded. The funded ones are now the actual funding, where we give you money, for example, to finance your stock, for example, to boost your business, and for example, to purchase some items or assets. So we have asset finance. Asset finance is whereby we finance you to purchase an asset. In that case, we call upon you to make a contribution. You contribute 30% or 20% depending on the quality of the asset or the age of the asset. So in that case, we finance the rest of it. The finance asset becomes a security. Okay, we also have, apart from asset finance, we have secured loan facilities. Secured in the sense that you must provide security. Securities that you provide to us are title deeds, logbooks for the motor vehicles. You can provide chattels, guarantees, treasury bills, treasury bonds. Those ones you can use as security. So we call them secured facilities. Qualifications, okay, we deal with the qualifications. I think we are going to take a lot of time, but one of the qualifications is that you must be in business or you have something that you want to do. Another thing that we look at is the ability. You must be having the ability to repay that loan. Ability comes from your income, the present income. So in that case, we look at what you are earning at the present, and also in a small measure what you are going to be earning after this financing. So we call that a secured facility. Okay, apart from that, going to what we are talking about in the case of a tender. You've gotten a tender, you've gotten an LPO, so you want now to perform. The bank has given you the performance bond, so you don't have enough money to purchase the materials or to employ people who are going to construct if you are in the construction industry. So in that case, we have what we call LPO financing and also invoice discounting. So LPO financing is whereby you have an LPO, you have to supply some goods, or you have to carry out a certain contract to build some road, but you don't have the cash. So in that case, we come in, we finance you. We finance 75% of the total cost of that contract or of the total cost of the LPO. You raise part of it. Actually, you have to make a contribution. So in that case, that shows us your commitment. Okay, LPO financing, we require an LPO. You should be having an LPO. You've already gotten the contract. You've been given the LPO by the government. So you want us to finance that. We ask you for security. So securities we are flexible. You can provide us with a logbook. You can provide us with a title deed. You can provide us with chattels, shares of trading companies which are listed in Nairobi Securities Exchange, or other assets, for example, electronics, furniture, and guarantees. Can obtain a guarantee from even the company. The company, the procuring entity that has given you the LPO, can guarantee or undertake that they are going to channel all the funds through the account. So that one can stand as a security on our part, so that we can finance you. Okay, another thing that we finance is invoice discounting. Invoice discounting is when you've already supplied your goods to the company, to the procuring entity, and you're awaiting payments. You've already invoiced them or given them your statement, and you're expecting payments. So most of the government or some entities pay after 90 days. So in that case, if you get another contract within 90 days and they have not paid, then you might not perform because you don't have the money. So the bank comes in and we finance you based on that invoice that you have, because we are sure you've already done your work. The certificate has already been issued by the procuring entity that you've already completed that work according to their specifications, and you are awaiting processing of the payments. So in that case, we can discount that invoice, meaning we are buying it from you, that invoice, so that we finance you. Once the payments are received, then it comes and settle the loan. So invoice discounting and LPO financing normally goes for 6 months, 180 days, because no LPO can remain standing for more than 180 days. Invoice, once you've invoiced, you assure you're going to receive payments within 90 days or even 60 days, it depends. So that is what we call invoice discounting and LPO financing. Okay, another thing that we finance is if you are a supplier to the supermarket. So we normally try to make our products to suit your needs. So in a case whereby the supermarket has given us an undertaking that all the payments will be channeled through the account that you have with us, then we can finance. We can finance you to supply them. Payments will be done through the account. We recover our parts that we finance, then you get the rest. So those are the financing options which are available, especially to an SME who is doing supplies, who is in business. We also have agribusiness products. Those ones we finance: dairy farming, cash crop, farm inputs. We call it kilimo biashara. Those ones we also do. Okay, apart from all those, there are also development loans, whereby you want to develop yourself. You want to purchase a plot. You want to build a house. You want to purchase a house. That is a mortgage. So those ones we also finance. We give you a long-term facilities that are tailor-made to suit your income frequency. So those are some of the finance options which are available with us. Okay, there are a lot of them. So we've just given you some which are relevant to you as SMEs. And if you have any questions, you can now ask. We've developed some flexible requirements or flexible security requirements. You have a security which is worth around 500,000. We also accept a guarantee from someone. Someone can guarantee you. We also accept if you are supplying, let's say you are supplying a very credible institution, the blue chip company, these ones which cannot go down. They are stable. They can give you a guarantee. Or in other words, we can arrange with them whereby They give us undertaking that they are going to channel the funds, and then we are going to fund you. Other flexibilities are that we can take a combination of securities, whereby you can provide a logbook, you can provide your household assets also, you can provide a guarantor. The guarantor can provide some other security that he has to count for to build up your security. At times, we find out that you don't have adequate security, but you have a very nice contract. In such a case, some of them require cash cover, whereby you place some money in a fixed deposit account. So you can agree whereby you give us undertaking that you are going to be building up that deposit to stand as security over a period of time. You can give a commitment that every month you will be putting aside some 50,000 shillings.
That's before or
after getting the loan, after getting that loan or a guarantee that you want. Yes. So most of them are tailor-made to you. We try to understand your frequency or your cycle, income cycle. So in that case, we can be flexible on that side.
So I can use money as a security?
You can use money as security.
At what interest rate?
You place the money in a fixed deposit account, which are earning interest rates per year. So it depends with the amount. Most of the time, these fixed deposits, they are based with the CBK rate. So currently, you can get as much as 8% on that per year. When we are financing you, we have to see the cycle. Okay, we can finance you for the first time you are supplying them. Because we've not seen you, and we've not seen the frequency that they are paying you. So in that case, if we can know the frequency that they normally pay after 90 days and they can't miss out on that, we can do that. We can finance. Okay, we can tailor make a product for you. Since, for example, you have a land, you are selling land. In that case, you have a huge land that you are selling. You don't need the money, but the people who are buying from you. So we normally have what we call off-takers loan facility, whereby we finance the people who are buying the land from you. Yes. So if your product is credible, people are buying it and it's fast moving, then we can finance the people who are buying from you.